All right, let's dive right in. Today, we're unpacking a story about a huge, and I mean huge, shift in the global energy market that's flying way under the radar. It's a story that argues the future of nuclear power, and the demand for its fuel didn't just get a little closer, it got yanked forward by nearly a decade.
To really get why this is such a big deal, you gotta understand the old story. The one that basically everyone in the uranium market believed. There was this central idea, this thesis, that a new nuclear renaissance was coming, all powered by these cool new reactors.
But here's the catch. The key word was always future. The consensus view was that this boom, driven by what we call small modular reactors, or SMRs, was a story for the 2030s. So for today's market, SMRs were basically a paper market. They looked fantastic in a PowerPoint deck, but they weren't actually buying a single pound of uranium.
And then, bam! One single announcement completely changed the entire equation. An event that didn't just move the goalposts, it absolutely shattered the old timeline for the entire uranium sector.
So that brings us to our first big idea, the timeline getting shattered. The whole thing hinges on GE Vernova's BWRX-300 reactor. Now, it didn't just get through a key regulatory hurdle in the UK in record time. It did it while construction crews were already pouring concrete for the exact same reactor design over in Canada. All of a sudden, the future wasn't the future anymore. It was now.
So, what's the big deal? I mean, it's just one reactor model, right? Well, this leads us to what our source calls the SMR's thirsty secret. This is where we get into the numbers. And the physics behind these so-called small reactors, well, it reveals something most people get completely wrong. Now, this is completely counterintuitive. It's the opposite of what you'd think. Because they're smaller, SMRs have higher neutron leakage. Now, that's just a physics term, but what it boils down to is that they're actually less fuel efficient. The bottom line? To produce the same amount of electricity, they actually need more uranium than a giant traditional reactor.
And the numbers are just staggering. This is what's being called the startup squeeze. Just to turn one of these reactors on for the very first time, to flip the switch, it needs an initial fuel load of about 1.1 million pounds of uranium concentrate.
And it's not a one-time deal. After that massive initial buy, each reactor creates this constant, reoccurring demand of roughly 250,000 pounds of uranium every single year for its entire 60-plus year life.
And this is where the scale really just smacks you in the face. That project in Canada, Darlington, they're planning 4 of these reactors. Just their startup fuel, before they've generated a single watt of power for the grid, will require about 4.4 million pounds of uranium. To put that in perspective, that's enough to absorb the entire annual production of a pretty significant uranium mining company. Gone. Just like that.
This brings us to what the source calls the double squeeze. Because the crucial point here is that this isn't just about digging more rock out of the ground. No, this new accelerated demand creates a massive bottleneck in 2 critical places at the exact same time. It puts pressure on the entire nuclear fuel supply chain. To really get this squeeze, you have to look at the whole journey. See, uranium ore from a mine can't just be plopped into a reactor. It has to be chemically converted, then it goes through enrichment to boost the concentration of the isotope that actually makes the energy, and then finally it's fabricated into these precise fuel assemblies.
And here it is. This is the absolute game changer. Most of these new advanced SMR designs, they need a special kind of fuel called HALEU, for which there's basically no Western supply chain. It doesn't really exist yet. But the BWRX-300, it's different. It runs on the same standard off-the-shelf fuel that powers today's entire global fleet. And what does that mean? It means it creates immediate demand on the supply chain we have right now.
And that creates the first squeeze, right at the start of the cycle, the mines themselves. These new SMRs are now in direct competition for the same limited supply of uranium that all the world's existing reactors are already trying to lock up in long-term contracts.
And here's the second squeeze, the one that a lot of people miss, the enrichment facilities. This is a huge bottleneck. Western capacity is already stretched thin, and with Russia controlling something like 40% of the global market, utilities are scrambling to find other suppliers. This new SMR demand just pours gasoline on that fire.
Okay, so let's talk about how we get from concept to concrete. In the nuclear world, the biggest risk always is the gap between a plan on paper and a real working power plant. Well, this time, that gap is closing, and it's closing fast. You see, this isn't just one little pilot project. It's what the source calls the fleet effect. The BWRX-300 is being rolled out like a standardized global product. Construction is already happening in Canada. Approvals are accelerating in the UK, Poland, the US. This is a coordinated deployment across the Western world.
What we're witnessing here is a fundamental compression of the nuclear timeline. Projects that used to take 10, 15 years are now being done with a new industrialized model. This is deployment at a speed the market has never seen before and, frankly, just hasn't priced in yet.
So, if all this is happening so fast and the demand numbers are this big, you have to ask yourself, why has the market barely even reacted? And that gets us to the market's blind spot, which is where the source argues the real opportunity lies.
The argument is that investors they're fundamentally misreading the signals. They're seeing this massive development for the entire uranium sector and treating it like it's just some minor company-specific regulatory news for GE Vernova.
And the market seems to be missing three key things. First, how procurement works. Utilities buy their fuel years in advance. The contracts for these reactors are being signed right now. Second, the signal effect. The UK's rapid approval gives other countries political cover to fast-track the same design. And third, what you could call utility FOMO, fear of missing out. Once the first project is a success, every other utility is going to rush to get in line.
Now, a shift this big could benefit players all across the fuel cycle. You've got the huge, established producers like Cameco, developers like NextGen who are sitting on world-class assets, and even pure-play bets on that enrichment bottleneck we talked about, like Centrus.
So let's just boil it all down. The crucial point is this. The entire supply and demand model that Wall Street has been using for uranium is built on the idea that SMR demand is a problem for the 2030s. This news forces that entire model to be ripped up and rebuilt, with a huge wave of new demand arriving 5 to 7 years earlier than anyone was expecting.
And that leaves us with a final provocative thought. This isn't about predicting the future anymore. The argument is that the future has already arrived. The demand is here. It's being contracted right now. So the only real question is, are you positioned before the rest of the market wakes up and realizes it's already here?